Equities. Equities in CFA Level 1 focuses on the analysis, valuation, and trading of equity securities and their role in investment portfolios. The curriculum introduces common and preferred shares, publicly traded and privately held equities, and the economic and voting rights associated with different equity classes and jurisdictions. Candidates study how equity markets function through primary and secondary market transactions, stock exchanges, over-the-counter trading systems, and market participants. The topic also explains liquidity measures, equity indexes, and market structures that influence trading efficiency and price discovery. Understanding equity instruments is essential because equities represent ownership interests in companies and are a major source of long-term investment returns. Equities provides the foundation for company analysis, valuation, and portfolio allocation decisions in investment management. The curriculum emphasizes sources of equity returns and the mechanisms through which shareholders receive value from investments. Candidates study dividends, share repurchases, stock splits, and reverse stock splits, along with their effects on shareholder wealth and market perceptions. The curriculum explains dividend payment chronology and teaches candidates how to calculate both price returns and total returns for equity securities. Understanding how companies distribute profits and manage capital structures is important for evaluating corporate financial policies and investor expectations. Candidates also learn how market conditions, company profitability, and investor sentiment influence equity prices and returns over time. These concepts help investment professionals evaluate investment performance, assess shareholder value creation, and compare companies across industries and economic environments effectively. Equity valuation is a central component of the equities curriculum because determining intrinsic value is fundamental to investment decision-making. Candidates learn the distinction between market price and intrinsic value and study valuation approaches based on book value, market capitalization, and enterprise value. The curriculum introduces major valuation models, including dividend discount models, free cash flow models, and residual income models. Candidates calculate intrinsic values using constant growth and multistage discounted cash flow methods while evaluating the assumptions and limitations of each model. Preferred stock valuation is also covered, including the effects of contingency features on value. Understanding discounted cash flow valuation techniques enables investment professionals to estimate fair value, identify mispriced securities, and make disciplined investment recommendations supported by financial analysis. Relative valuation techniques are also emphasized because analysts frequently compare companies using market-based multiples and peer group analysis. Candidates study price multiples such as price-to-earnings, price-to-book, and enterprise value multiples, learning how to calculate and interpret these metrics across industries and market conditions. The curriculum explains the use of comparables and forecasted fundamentals in estimating equity value and determining appropriate peer groups. Candidates also study financial statement forecasting and how pro forma models support equity valuation. Forecasting revenue growth, profitability, capital investments, and financing requirements allows analysts to estimate future cash flows and company value more accurately. These techniques strengthen analytical capabilities and support practical equity research used by investment managers, analysts, and institutional investors globally. Industry and company analysis form another major area within equities because understanding competitive dynamics and business strategy is essential for valuation and investment analysis. Candidates study industry classification systems, market size, profitability trends, and competitive positioning using frameworks such as Porter's 5 Forces and PESEL analysis. The curriculum explains how external factors including regulation, economic conditions, and technological changes influence company performance and industry attractiveness. Candidates also evaluate company-specific factors such as revenue drivers, pricing power, operating profitability, working capital efficiency, and capital structure decisions. Understanding competitive strategy and industry conditions helps investment professionals forecast future performance and assess sustainable competitive advantages. These analytical frameworks improve the quality of investment recommendations and long-term portfolio decisions across diverse sectors and markets. The equities curriculum concludes with equity research reporting and factor-based return models used in modern investment analysis. Candidates study the structure and content of professional equity research reports and compare sell-side and buy-side analytical perspectives. The curriculum explains why analysts may produce different valuation conclusions despite using similar models because of varying assumptions regarding growth, profitability, and risk. Candidates also learn how the capital asset pricing model, market model, and multi-factor models estimate required returns and systematic risk exposures. These models support portfolio construction, performance evaluation, and security selection decisions. Overall, Equities equips candidates with the technical, analytical, and strategic skills necessary to evaluate companies, estimate intrinsic value, and make informed equity investment decisions in global financial markets.